So, what is a mortgage commitment? So, a mortgage commitment is, as the name suggests, an actual commitment from the lender that you are getting a loan from to lend you the money. It's a actually legally binding document. A lot of people don't know that. And the mortgage commitment essentially says that we, the lender, commit to lending you X amount of money, whatever you applied for, subject to certain conditions. So when you view a mortgage commitment, if you've never seen a mortgage commitment, it's going to have all your loan terms, everything that you locked in. It's going to have the loan amount, the the purchase price of the home, all of the details of the loan, and it is going to essentially say we are committing to lending you this amount of money at this interest rate with this amount of these fees, subject to one, two, three, four, five, and the one, two, three, four, five are going to be conditions that you need to fulfill prior to that commitment basically being enforceable. So they'll say, I'll give you an example. We will lend you $500,000, at 7% interest rate, subject to clear title, subject to employment verification, subject to an appraisal supporting the value, at or above the purchase price. And basically, once all those things are fulfilled, your loan is 100% approved. You have what would be considered a clear to close or clear mortgage commitment with no conditions. Um, and at that point, the lender is essentially required to advance you the funds once you have fulfilled all of the conditions. If you do not fulfill all of the conditions, for example, the lender is not required to advance you those funds. So this is what can give, in real estate transactions, oftentimes you will have something called a loan approval contingency, where you need to essentially have a mortgage commitment by a certain date in order to, or rather, let me rephrase that. If you do not have a mortgage commitment by a certain date, or if you are unable to obtain a mortgage commitment, then you are able to back out of the contract. So typically, that's going to run. It depends. The timeline just depends on your real estate deal. But what I often see is 2 weeks to 3 weeks. A seller will give a buyer, hey, you need to get a mortgage commitment within this period of time. If you're unable to do so, then you can cancel the contract. That way, you're not screwed if you're unable to get financing in some way. But oftentimes we'll have people ask, hey, we need to see the loan commitment. We want to make sure the buyers are able to move forward. We release that loan commitment to the buyer. The buyer provides it to their agents, and that gives the seller like a clearer picture. It lets the seller know, like, hey, this person is definitely going to be able to move forward. So it's a step above and beyond a pre-approval, which is a step above and beyond a pre-qualification. A mortgage commitment is essentially the strongest piece of documentation that you can receive when it comes to a loan approval. One other thing that I want to say about this, and this was especially relevant in a hotter market like during COVID, is one thing that we offer as a service. Is we offer pre-qualification where somebody just sort of breezes your file, does a quick little check, and says, all right, you should be approved for this. A pre-approval is a step further. We're actually analyzing all of your documentation. We're running automated underwriting, and saying, like, hey, we've reviewed everything. We know, with a reasonable amount of certainty that if you apply for this loan, you will get approved. We actually do, we can take it a step further, which can be powerful when you're negotiating a real estate deal, is we do something called a TBD commitment, which essentially is we do not have an address yet. However, every other aspect of your loan is sent to an actual underwriter, and we get you a loan commitment with a list of conditions, TBD, right? Executed contract for X amount, within this geographical area. So you can actually go in to a real estate deal with a underwritten loan that is already approved, and you already have a loan commitment, and tell the seller, like, hey, Mr. Seller, Mrs. Seller, we actually have something better than a pre-approval. We have a loan that is already approved, and the only thing that it is subject to is clear title, a contract on your house, appraisal, and homeowners insurance. Everything else is done. Once we have those four things, we can close the loan. Typically, when people are doing that, those are the kind of deals that you see, that are closing in 7-8 days from the time that you execute a contract. So just a lot of people don't know that, but it's an extra tool. There's a lot of additional stuff that you can do to be more competitive when it comes to making a real estate offer.